Hey everyone, welcome back to the Crypto Bull channel with your host William. Guys, let's talk about the Fed, shall we? But before we get started, remember, I'm not a financial advisor, even though we're talking about finance stuff right now. That's not what I do for you. I talk about trending stuff, news, like we're going to talk about today, anything cool we think you need to know, but not what to do with your money. So if you need to do something with your money, please go somewhere else. Speaking of that, down in the description, you're going to find everything you need to know that we want you to know. All the links, all the good stuff, that's where it's at. Also, good stuff. Speaking of that, we are going to have that subscribe button. Please click it. It's a good one. And click that notification bell because stuff like this we drop, it's time sensitive. So you need to know about it with that notification bell. And if you like what you see, you know what to do. Click that like button. Let's talk about it. So, guys, yesterday the Fed held interest rates steady, keeping the federal funds target range at 3.5 to 3.75%, guys, which is very strange considering Trump picked that guy. You'd think he would have done something more drastic and horribly bad for the economy, but he didn't. He kept it steady. And normally, actually should have raised it a little bit, but normally when people hear rates unchanged, they think the market should calm down. But that's not what happened because the market didn't just hear pause. It heard inflation is still totally elevated and the Fed is still focused on price stability and rate cuts may not be coming as fast as the traders wanted, guys. And that is a fact, Jack. So let's talk about it. And that's why the market went nuts. Stocks sold off hard after that announcement, with the Dow dropping about 500 points. The S&P 500 down around 1.2%, and the NASDAQ also falling more than 1%. So even though rates stayed relatively the same, traders started repricing the bigger question. Are we actually getting easier money soon, or is the Fed staying tight for longer? And yeah, excuse me. Egad. Colzette. Not returning. Get out of here. No. No. Here we go. I don't want to subscribe. So you can see it in the background there. I can't move this. But the real shock was totally, guys, the tone. Reuters reported that nearly half of Fed policymakers now see a possible rate hike this year. And that's a major shift from the cut expectations traders had been leaning into. And that's why risk assets reacted so violently. Crypto, tech stocks, meme coins, high beta traders, all that stuff lives and dies on liquidity expectations. And when traders think money is getting cheaper, they take risk. When traders think the Fed might stay tight or even hike, they start cutting risk fast. Shabam. Here's a page that doesn't have a bunch of bullarchy all over it. So guys, speaking of this page, this is where crypto gets totally interesting. Crypto doesn't just trade in a vacuum. Bitcoin, Ethereum, Solana, altcoins, they all react to the same macro pressure. Interest rates, liquidity, inflation, dollar strength, and risk appetite. When the Fed stays cautious, crypto traders usually become more defensive. Leverage gets punished, funding gets weird, and those easy long trades suddenly stop feeling so easy. So in a week like this, I'm not thinking, how do I get rich fast? I'm probably thinking, where is the volatility and how do I avoid being the exit liquidity? You know, there's a lot going on right now, so it's a weird world. It's a weird world. And that's where a platform like BloFin becomes completely relevant, guys, because BloFin is built for active crypto traders with spot markets, futures, copy trading, bots, and real-time market tools all in that one place. Guys, their homepage shows futures, spot, copy trading, and all that stuff. You can earn and trade and trading bots our core products. But the important point is not to use more leverage. Actually, it's the opposite. When the Fed shakes the market, you need tools that let you watch price action clearly so you can control your risk and avoid those emotional trades, which we all fall into at some point or another. BloFin gives traders access to crypto futures and spot markets, and their homepage describes the futures spot side as high performance trading with real-time listings and fast execution. And that matters, guys, during macro events because speed and liquidity matter, but discipline matters more. And if the Fed is moving the whole market, I don't want to blindly chase green candles or panic sell because of the red candles. I want to see the trend, understand the volatility, and make decisions based on structure and not the adrenaline. You know what I'm saying? Of course you do. So guys, at the end of the day, here's the big takeaway. Yeah. The Fed held rates steady, but the market didn't take it as everything is totally okay. So it took it as higher for longer might still be alive. That's why stocks sold off, crypto got shaky, and traders started reassessing that risk. So in that kind of environment, platforms like BloFin are useful because they give active traders access to markets, those futures, those charts, and those tools. But the goal is not to gamble harder, guys. It's to gamble smarter and size smaller and respect with what macro can do to crypto. And guys, remember, I'm not a financial advisor. My name is William. This is the Crypto Bull Channel. You guys stay absolutely classy. Stay amazing. I'll catch you in the next one. Peace.